Hello. Hi, everyone. I can see you in the chat. I hope everyone is doing well. What an exciting event today we have. NLP, NFP with NFP, everything in one. Good to see you all. I can see some countries in here from India. Hello, Botte and Inner Eye. Hello, everybody. We have an exciting event today. Today is probably what in the traders world we'll call the Champions League event of trading. We have NFP release in just, what time is it? In probably like an hour, in less than an hour. And we have an exciting lineup for you today. First of all, we're going to go into a webinar where I'm going to break down how to trade NFP. We're going to talk about what is NFP, why is it so big, why do people trade it, why do they try and capitalize on these big movements that happen in the market, what is non-farm payroll, and what can you do with it in a safe manner and not like everyone else. We're going to look at the common mistakes that happen in the trading world. We know them, but we're going to reiterate them. So when we go to this NFP, we're not going to do the same thing and blow our accounts. We're going to look at how to prepare, how to set up. We're going to look at what types of strategies you can use with NFP. It's going to be a good event. And not only that, I know a lot of you already know, we're going to give you 3 giveaways, but we're going to do that towards the end of the show. So make sure you pay attention because you need to do certain tasks to get these giveaways. And the first task is to like and this channel. Also join our Discord if you haven't. In the next slide, we have a little QR code where you can use your phone and you can log into the Discord. And yeah, we're going to start with our how to trade the NFP release. And we have some guests coming from Trade the Pool and from the Fivers. So it's going to be a really, really good event. Grab your coffees. I have mine, even though it is quite late here. I thought I'll boost myself on coffee for you guys and to have my mind sharp for NFP trading. Let's have a quick look on the chat. Tips and strategies, I see. How do we not lose on penalties? Yeah, we're going to cover a lot of stuff and we're going to go straight into it now. Okay, how to trade the NFP release. What are we going to look at today? Let's have a look on the lineup. Today, we're going to have 2 guests on the show. I believe it's our second show where we're having guests, and you probably know them if you are from the family of Trade the Pool and the Fivers Trader. I enjoyed watching LJ with the one-to-ones on our TWC that we were running for the World Cup. It's super fun to watch. And as you know, as we mentioned earlier, we're going to be giving 5,000 challenge giveaways with a 10% milestone and then a 5% milestone. That's one of the accounts that I use to grow to 40,000. So it's a good one as long as you know how to trade. And I know a lot of people are super excited for the giveaways and get that out of the way because now I want you to really focus because there's going to be so much knowledge between the 3 of us that you can use live into the NFP event, which is coming very soon. So what are we going to cover today? Today, we're going to be covering obviously the release, and we're going to give you some ideas on how you can execute safely. So we're going to start with, there's going to be 6 chapters into this webinar. We're going to start with what is NFP? What is non-farm payroll? Why do people trade it? How to prepare for it? How can you prepare for it? Literally prepare step by step, 30 minutes into the show. What setups you can look at? What you should not do in the setups. We're going to look at that as well. We're going to look at entry strategies. We're going to look at risk management. What type of risk management can we use when it comes to NFP, because it's very volatile and it's volatile for a reason. So we need to be safe when we're trading it. And what are the biggest common mistakes that happen when we're trading? So those are the chapters that we're gonna look at. If you pay attention, I can promise you guys, you're gonna be in a very good place when it comes to trading NFP. And I see. Let's go. Let's go. Nice. Nice. Okay. Let's talk about some numbers. First of all, I really want you to focus on 3 numbers when it comes to NFP. Yes, what moves the market is the spike, and everyone tries to chase the spike. But after this event, you're going to think of the numbers first, because the numbers is what moves the event, not the spike for you to trade it. The first number that's going to come out is the headline. If we look at May, we looked at there was a forecast, and then there was the headline. And the headline was 172,000 non-farm payroll number. We also had the 4.3%. That is your unemployment rate. So we had the headline unemployment rate. Ignore the average hour for now. And we have something that most traders miss when it comes to NFP, and it's the revisions. This is in the same release. And I'll tell you why that's important, because we can have a very strong release, such as a positive 172,000, but the revisions might be negative, and suddenly everything becomes bearish for the USD. So, and the economy of America. So that's what you need to learn first. Who here looks at the revisions? I would like to see what type of knowledge do we have in here. Are we the traders that trade the spike, or are we the traders that actually do the revisions and learn about it and go prepared into an NFP? Let me know in the comments, and we'll see. Chasing the spike versus trading the plan. Which one have you been doing? Let's be honest. That is the question for today. So the other thing that you're going to see on the bottom of the report there is what increased and where. So we can see that, for instance, in leisure and hospitality, there was an increase of 70,000, in local government, 55. And on the far right, you will see a minus 22 in financial activities. So that tells you a story, right? We need to be aware of what that means when it comes to trading. But if you take anything from this session, especially going to the NFP, is think of the headline number, think of the unemployment rate, because that hasn't changed since July 2025. It's gone between 4.3 and 4.5. Imagine now seeing a miss on that. What will that do to the market? And obviously, we can now talk about the average hourly earnings as well. Really, is there an edge in NFP? That is a very good question. And I can tell you something. The edge is always in the prepared. There's no edge if we turn up, look at the event, and we just try and reverse the spike. That is not an edge. That is gambling. So today, the edge will be in the preparation, in the execution, and following a plan. So that's what you're going to learn today. And I agree with, who was it? Hasmuk. Did I kill that name? Let me know if I killed that name. TJ, hello. Deddy, hello. Nice to see you. Some familiar names in there from the Discord. Guys, if you haven't joined the Discord, please click on the QR with your phone and join the Discord, because every Monday and now Tuesdays, there's going to be live events where I show you how I trade. And there's also a lot of stuff that happens on Trade.Set.Go on our Discord there. So you do definitely want to join, and it gets you involved in our giveaway today. So we don't want to miss that either. You don't want to be that guy who's not taking part in these amazing opportunities. So let's continue on. We're going to look now, what actually are the scenarios of the NFP? Funny enough, NFP, everyone looks so complicated, but it's literally 3 things that can happen. We have the forecast, what it is. For instance, today, the consensus is that it's going to be a number of 110,000. The consensus is also for an employment rate that is going to stay at 4.3. And you can see that here on the top. The prior month, as we know, is 172. So what can happen? Now, if the number is more than 30,000, that is that we actually stronger numbers than what it was forecasted. And that means that, for instance, the euro dollar, because the dollar is going to be strong, we're looking for sell opportunities. Or for the USD JPY, we'll be looking for buys because we have strong numbers around US economy. And the biggest thing that influences US economy is the dollar. What does that do to gold? Obviously, there's going to be the reverse effect. So we'll be pressured lower towards the gold if we have strong numbers. And if we go to the far right, where actually the forecast is less than it should be, then we are looking at bidding higher on the gold versus the dollar. And in the middle ground, that's when we see sometimes things that don't happen is, let me see, I see some issue with my camera there. I hope you can hear me. The middle ground is that we looking at something that is not going to change so much. So it's not going to be a clear differentiator on if it's going up or down. So those are the three things that we can do with the, let me just remove the camera so you can see the screen better until I fix that. But from a missing framework. So that means that you're not planning the event. So you haven't gone into the event with a plan. And that's what we're going to try and fix today. So every time you're going into a trade, you will be prepared. Like we said in the beginning, we are talking about the Champions League of trading. So we're looking at the most watched economic release on earth. Where do you find the release data? The release data is at the US Bureau of Labor Statistics. That is where you can go on the website, and that's where you're going to find a PDF of the release. Obviously, you can find it at Forex Factory, investing.com, and so on, but that's where you're going to find all the detail of the report. The first Friday of every month at 3:30 UTC, is when the number is being released. But this week is today, bizarrely, because it's Thursday, but it's today for a reason, because we have July 4th celebration in America. So they've moved it a day. Now, what to expect in these movements on the USD correlation pairs, anything major around USD, we're looking at 50 to 200 pip move in a few seconds. We don't normally get that, especially when it comes to trading Forex. So it is a big mover and we need to keep an eye on it. How do I prepare for it? Let's talk about what the preparation looks going into it for 30 minutes. And we can do that today. First, we need to find what the consensus is. What are the numbers? What are the forecasts? What is everyone expecting? Are we expecting that we're going to miss, or are we expecting that we're going to gain on the release? The next thing is we need to mark what is the levels, what is the flat line of the currency that we're looking at, or if it is the USD. So the marking the levels will be, that will be 20 minutes going into the event. I'll show you in a little bit on the charts, but what we're going to see is we need to find what is the resistance and what is the support before going into the event. So we can identify, have we broken out of that? And if we have broken out of it, then we can start thinking of where might be an opportunity. If everything is looking bullish, and we know now what looks bullish, we look at the headline event, what is the number? We look at that unemployment rate, what is the number? And what's the final thing that we talked about? The revisions. So those three, if everything aligned and everything looks bullish, that's when we can look for a bullish opportunity. What is the normal thing that we do in NFP? Oh, the price broke higher. And everyone tries to chase the price. That's when we get caught, guys. So we need to have everything aligned in order to go bullish. And if it's a miss, to be bearish. If not, we don't do anything. Now, 10 minutes in, we think of all our trades that we have live onto our account. Do we have anything that we need to reduce size or we need to close size? We can never be fully sized on an NFP event because if anything, volatility increases. And also with your brokerage, the spreads widen. And you need to be in a position where you can control your stop because you need a little bit wider stops in order to be able to trade it appropriately with the correct risk on your trading. Now, we talked about the market compressing just before of the release data. We've seen that every NFP, you see like the numbers are doing nothing. The candlesticks are going up and down and nothing is really moving. There's a reason for that. Is because everyone is anticipating what is going to happen to take position into their trade. So as you can see on the top side, we have a resistance zone. On the bottom side, we have our support zone. And when the NFP hits, one of these two will be broken. And if we're short or if we're long, we need to react to it. 3 outcomes, 3 reactions. This is what we're going to be looking at. There's only 3 things that can happen. It's a strong beat of the number. Like we said, it will be above 30,000. If that corresponds with the same unemployment rate of 4.3, and if that corresponds with a bullish revision of the previous 2 months, then we're bullish. If there's no clear edge or is within the same numbers, then we are neutral. And if there is a miss of more than 30,000, or, and this is another one that we haven't talked about, we might have well, I guess we did touch upon it in the beginning. We might have the revisions that are different, they're not correlated with what the actual headline is. Okay, so from these 3 numbers, if anything of those is out of touch, then we either do nothing or we decrease our size massively because we are not in line with what we are anticipating the market to do. What most traders do, and we all need to be honest here, guys, when we see that big candle coming in the 5 minutes or the 1 minute, a massive candle, 60 pips in 10 seconds, people panic. They jump in, they try to sell it, they try to reverse it. They think that they've lost the opportunity of getting involved in the market. They get filled at a worse price, especially because the spreads are widening. Suddenly you think you're going to get a good price and you're all the way out of the spike, almost at the top of the spike, and it keeps going. Your stops potentially can be caught because you are thinking of, oh, I can make a lot of money in this event because it's moving fast. I'll put a big lot size. And that is the recipe to blowing accounts. Now, what is the reverse of that? What have we talked about? We're talking about the professional approach. Reading what the spike means. And I'm going to repeat it again. 3 numbers. What is the headline? What is unemployment rate doing? What are the revisions saying? If they're all aligned, then we have a clear path on what to do. So, how to identify a spike? That is the other one. Are we breaking a resistance level or a support level enough? So the dull pricing that happens just before the event, then we are looking at a break of structure, and we're going to talk about that when we look at the strategy. Phase 1. Phase 1, we are looking at reading the windows, right? So what is the times where we prepare and what is the times that we execute? So we need to first identify the direction. Like we said, miss or hit. Mark the spark high and the low on that candle. If we're looking at the 1 hour, we are looking at the top of the hour and the bottom of the hour. If we're looking on, I wouldn't go lower than 30-minute candle because then you become the noise of the 30 to 1 hour. When we have all these elements in place, we check the revisions, right? We're not in a rush, guys. Even if it's 5 minutes into the event, don't start jumping and throwing your lots in there, right? The market is not going anywhere. So we need to make sure that you are using appropriate sizing when it comes to entering and looking at the data from the PDF report. You also can see it on the Forex Factory. I'm going to see that. When we do all that, then we're in the entry level. What do we need to think of the entry? We need to see if the breaking of structures are happening with alignment of what the numbers are saying. If they are, then we have a green light to trade it. If we have a green line to trade it, the only thing we need to do is see where our stop is going to be. This is really important. Everyone starts with jumping into the market. But if we can identify where the stop is, then we can see, is it worth it from a risk reward to trade it. Price retraces after the spike. This is a normal thing that happens. We have an over-exaggeration of a price, then we'll see the retracement, then we can go in and look for, let's say, 1 to 2 reward. Next. This might be the scenario. We wait for the level, react, and we don't predict, right? If I see a spike upwards, I don't want to predict if that's going to retrace 50% or if that's going to retrace, it's going to keep going. That's not the way professional way of trading happens. So we see the pre-NFP high level. If it's positive and it's bullish, I have an opportunity to go in. Where does it make sense for me to put my level, my stop level? Into the retracement, right? And where that level might be. Now, what can I target? Obviously, if I'm looking for a 1 to 2 reward, it might be the highs of the previous spike. But if I'm just looking for a monetary value of a 1 to 2, that might be that you're only looking for 10 to 20 pips. And that might be an amazing quick trade for you when you're trading NFP. We don't have to tackle the best 50R on a trade, right? This is not the trade that is going to change your life. This gives you an amazing opportunity for you to trade with volatility. You don't pick the numbers, you derive them. Right, let's focus on that, guys. This is one of the most important things, risk management. What are we doing here? Let me see if I can, let me try and change my camera. This won't be the best looking camera, but maybe it's better than for you to be able to see me. Let's see. No luck there. Try and fix it when we have our first guest on. So, fix the loss before the trade. When you go into NFP, the most important thing is knowing what you are risking. We're not going into NFP thinking that we're going to pass a challenge or that we're going to make the big bucks. Because we have a Trade.Set.Go account with 400 leverage, this is the trade that I'm going to make it happen. This is not how we trade, guys. This is not how you become financial free with trading. The first thing we need to have a fixed and monetary value that we're willing to trade that makes sense to the account. If it's a $10,000 account, it might be that we're looking for 1% of that. 1% of that means that I'm willing to risk $100. Now, if it's $100 and I want my pip stop to be quite wide, because we know that the NFP can move 200 pips, right? So we need to have some room, even if we're at the bottom of the range, to be able to maneuver our trades. So it might be 50 pips. How do I calculate then what lot size I need to work with? Write this down. This is how we're going to calculate our position size, and if we're looking for a 1 to 2 reward, let's say. And then you can multiply if you're looking for more. But the size is your risk. So for instance, $100. And if you divide that by your stop, which will be your pips away, and times the pip value of what you're trading. It might be, for instance, in your $10 or whatever per pip. Then that would give you, in this case, for 1% of a $10,000, is giving you a 0.2 lots. Now, we can be clever, and you know the way I trade, you can break that 0.2 lots into 0.1, 2 positions, so 2 positions of 0.1, or you can go 0.05 for 4 positions, right? If you have a bigger account, if you have a 100,000 account, you might be willing to risk $1,000, right? Then we're looking at 2 lots, which you could break in half a lot per position. If you are trading with pound averaging or dollar averaging, or if you're trading full size with 1 to risk reward fixed, then you would trade with a 0.2 lot to make or whatever you're trading. Let me see in the chats how we're doing. Please explain in detail. I'm hoping this is good detail. I spent a lot of time putting this together for you guys, and I'm doing my best for you to understand this. Yiannis is a legend, bro. Blah. Cheers to Ragnar. This is from the old times. Nice to see you guys. Okay. Let's go next. And apologize for the camera. It's a technical issue. I'm going to try and fix it for you guys. For now, you have my beautiful voice and not my beautiful face. But the voice has to do. NFP is not a normal session. We can't treat it like we normally trade every day. Hello, income source. Nice to see you. We have to adapt to the volatility of the event and the reasoning of that event that is there, guys. Think about it. This is what the interest rates is going to be looking at, what countries are going to be looking at in terms of strength. It has an impact not on our trade, it has an impact on the whole world. So we need to be super on it when it comes to our risk management because it has big movements. So if you want, I know you like some simple steps or rules. If you want a rule, the easiest rule to have is half your size. If you're trading 1 lot, make sure you're trading half, right? Because you're adapting to that volatility. That will give you a wider stop. It will give you an ability to trade it. And don't do the most common mistake that everyone does, which is to trade both directions on NFP. It's easy to think that that is a good idea, but then you will see that you're taking good profits and you're on the right side, and then suddenly the market gives you another opportunity because now you're trading in the reverse, you're going downwards, and then you decide, well, my original plan was to go up. Now I've got a discounted with profit. I might as well go up again. And that is when the market keeps going into the right direction downwards and you've blown away all the good work that you did because you couldn't hold your idea of one direction. So don't be that guy. Alba, good to see you. It's good to see you too. Let's get to our next get real moment. The release is the same for everyone. The preparation, however, is not. If you can be the guy who does the work before you have... Let's discuss what we've covered here. What is NFP and why it matters? What numbers you need to have in order to decide if we're going long or if we're going short? Are these in alignment with your strategy? And all that together will put you in a place where you're prepared to execute a good trade for NFP. Now, let's talk about what are the common mistakes that we see in every single trader that tries to trade NFP for profit. Trading the first candle that comes in, 1 minute in, 5 minutes in, off we go, rocket up, rocket down. That is not preparing, we're guessing, that is gambling. Unless you have a strategy that you have to trade for 5 to 6 minutes after the event, but it's very rarely. And if you're new to trading NFP, I would recommend looking at the 30-minute and 1 hour, just because you can see the bigger picture of that spike move. You don't want to be in the waves of the micro movements. Normal positioning, using normal positioning. If you're trading, let's say 1 to 2 lots in your normal trading, and suddenly you're entering full size on the event release, that is going to hurt and you're not going to be able to manage it. So that's where risk management comes in and how to control that. Forgetting the revisions, right? This is a newbie mistake, which now you're not going to be a newbie because you have the information. And I can tell you where you can look it up. You can go on bls.gov/news release. They release the news there. It will be a PDF form. And if you're not the person who wants to read all the details, guess what we have these days? We have an amazing thing called AI. You can take that, put it in an AI chat, and ask it and say, give me the 3 numbers that we know are important. What is the headline? What is the unemployment rate? And what are the revisions? Tell me now. And then don't ask it to give you the direction. Make sure that you do that. But it's an easy way for you to get information quickly so you can start trading in the next 30 minutes. Holding existing trades, guys. We've all been there. We have been in a big position and suddenly an NFP comes and you're like, oh, I just want to be involved in this. But you have your trades in and you're half the size, let's say. There's 2 things that you can do there. If your brokerage allows it, you can hedge that position and you can let the movements happen, and you can come to it with a clear mind. And I know you're not going to be trading it, but at least you'll be back to where your trade was and your risk was before the NFP. The other thing is close your trades. What risk is worth taking a 10x when you go into an event like this, when you could be taking the risk that you took because you took a bad trade into NFP? That's fine. You can recover that. Revenge trading after spikes, we have all done that on our learning curve. Volume goes in. Wow, what a move. I want to be involved in this. We've got it wrong. It clips us. And then we're like, I need to get my money back. And then guess what happens? Account gone, blown. Or you're taking way more risk than you would in a normal account. So all of these 5 mistakes that we've got here, and there's more, but these mistakes, if you are aware of them first, you will be in a much better place than anyone else who's not going prepared into this event. So 2 questions that we need to talk about in every entry. Do all 3 components agree on directions? Again, I'm going to put it into your head. Headline, unemployment rate, and revisions. Remember the revisions, because that is what affects the post 30 minutes of the trade. Have I waited for a retest? And is my size calculated? Have I gone into, like we said, am I risking the 1%, or am I suddenly from 1%, I'm now risking 5 to 10%? And is my size calculated? Let me see one of these messages. Where is LJ? I can see some pretty faces down in the studio. They're going to be coming soon. Don't you worry. They're all coming here. We've got so much information coming for you guys, and we're going to be ready for the NFP as well. So holding trades before NFP is risky. Absolutely. If you are holding it with the risk of you're trading it normally, yes, absolutely. You're adding another 100 to 200 pips on your trade. And if that goes in your wrong direction because of unknown information, you don't know the information until it comes out. So I would call that not risk managed. I would close it, or I would, like I said, if you have a way to hedge that position so you can come to it later. So as rules, what we need to remember is entry. Have I found my entry? Is my position in alignment with what the results are coming out, and am I sized appropriately? We talked about that enough now. More sessions, same standards. So this is something that you can take not only in NFP. This applies to CPI, FOMC, and other red events, economic events. As you know, I'm a little bit of a specialist in Forex and indices, but you're lucky today because we have a beautiful trader from Trade.Set.Go who's going to be running us through on what that means with stocks and I believe futures. So stay tuned for that. And also, at the end, guys, we're going to be giving you 3 accounts of 5,000 challenges. So these are going to be high stakes. And the good thing about these is that you can do your first for 10% milestone, and then it halves. I wish I had this when I started. For me, it was always 10%, and it was really bloody hard. So you're very in a very lucky position here because of this amazing opportunity that you have with the Fivers, that you can start with one of these accounts and build your fortunes. Another thing that I want to go before I bring on one of our guests is to join the Discord for 2 reasons. One, to take part in the giveaways today, you have to join the Discord, is one of the requirements, and like the show. And also in our Discord, you will find webinar library, you'll find tools, which I've created for you guys that I think are super, super useful. And they're in a form where you can apply them on your daily routines. There's libraries, educational libraries, and there's 2 webinars on there already. So make sure you go and explore and communicate with the nice community that we have there. And that is it from me. The last get real moment for you is to first prepare for the release. Read the release first. Don't just open up your charts and go looking for the big lot size wins. Prepare for yourself. See if your direction is right. Trade the retest, in this case, the strategy that I showed you, and you will be fine. Now, I believe we have ready a person called Steve. Steve, are you ready? If you are, give me a thumbs up. I can see the thumbs up. Let me see if I can bring you up here. Hello, Steve. How are you?
Hey, good morning. Thanks so much for having me on.
We're really excited here. I have seen your stuff on Trade the Pool. I'm really excited. I'm sorry for the camera. You're talking to a picture of me. I'm trying to get it working when you are showing your stuff. But it's the first time I'm meeting Steve, so I would love to hear a little bit about your background in trading, and the community here would love to hear about your background as well.
Oh, well, thanks so much. Yeah, I'm Steve Tileman. I've been with Trade the Pool about 2 years now. I've been trading about 7 or 8, and I'll be the first to say the first couple of years there were a little bit rocky. So I'm a trader that probably my best strength is that I'm very transparent. I'm still in my learning process, and I've been profitable about 4.5, 5 years now. So I'm here to help share what I learned over those first couple rocky years and how to get you guys profitable and on the right track there. So I primarily trade futures or equities with Trade the Pool. You know, I'm like a kid in a candy store. I want the shiniest, newest thing, you know, so all these new themes cycling around, all these cool stocks. I want to be involved. When I'm really trying to hunker down and make my money, I'm usually just trading futures or actually CFDs sometimes too. So I'm glad you had me on here, and I'd love to get into a little bit of information on NFP whenever you guys would like.
Super stuff. I think we can go straight into that. Are you positioned with SpaceX?
Am I positioned with SpaceX?
Yes.
Not currently. I was hoping to short it on the break of the opening, and it just held for like 4 days. So hey, I'm waiting for my shot. I'm a little bit bearish on anything IPO and anything Elon's related to be honest.
I've heard some stories about SpaceX, but we'll go for that in another time because today is all about NFP, and I think we are ready for you to go through a little bit of information for the guys.
Yes, sir. Awesome. All right, folks. So today we have the NFP a little bit early, usually the first Friday of the month, but in this case, the first Thursday, due to the 4th of July tomorrow, or day off tomorrow, I should say. So what NFP is essentially the Bureau of Labor Statistics drops the most, one of the most market moving numbers of the whole economic calendar today. So that's non-farm payrolls, and essentially it's about how many jobs the U.S. economy added last month. So it starts we get the release at 8:30 market time in about 20 minutes. So I will hustle through here and we'll talk about what we can possibly do to trade this. Let's see. First off, it's really going to be about the print itself. So it's not so much important about the slow drift into open or the futures positioning. Obviously no earnings that are going to be influencing this. It's just the number dropping, and that number is going to set the direction for the session and maybe the week. So let's build that map out. What are we expecting? What does each outcome mean for your positions? And what should we watch in real time when that report hits so we're ready to go? So Wall Street's consensus for the June non-farm payrolls is 113,000 jobs. That's the number the market has priced in. So let's give some context on that number. May came in about 172,000, a blowout that spooked the bond market and sent higher for longer expectations really surging there. So 113 in June would represent a meaningful deceleration. The range of economist estimates runs from 87,000 in the low end all the way to 125 on the high end there. So JP Morgan is calling for 125. Others are as low as 87 there. The unemployment rate is expected to hold at 4.3%, and that's essentially unchanged from May. That's been stuck at 4.3 for several months now. So if that ticks up, especially to 4.4 or 4.5, that's a cold signal regardless of what the headline payroll numbers show. So the third number here, that's average hourly earnings year over year. So expected at 3.5% there, down from 3.6. The Fed cares about wages almost as much as it cares about the headline number. So wages feeding into services inflation, feeding into the PCE, that's that stickiness problem that the Fed has been fighting all year long. So 3.5 or lower keeps them comfortable, and 3.8 or above reopens the inflation question. So those are the three numbers that I'm really focused on here. 113 on payrolls, 4.3 on unemployment, and 3.5 on wages. So if you know these before the report drops, I think you're in a lot better of a position to know what to do, as that number hits. So a few other things that I want to go over here as I hydrate. Hydration check, folks.
I can see.
FIFA World Cup.
What was that now?
FIFA World Cup.
I'm sorry, I'm having a little trouble hearing you. Let me turn my volume up. I didn't even see you guys creep in. It's good to see your faces there. How y'all doing?
How you doing? Good to see you again, Steve. How are you doing, Yiannis?
Hi, LJ, right?
LJ, yeah.
LJ. What does it stand for, the LJ?
So Lockie John. So John is my middle name. Lachlan's my first name. Just became a go-to. It was my old Discord name, YouTube, that kind of stuff. So amongst the fivers, it's just become my nickname these days.
We call you LJ then, that?
Yeah, everyone just calls me LJ.
Super.
Yeah,
Nice to see you as well. I was going to do a big intro for you, but you creeped in early and I had my camera off. So guys, this is LJ. I think you know him already from the fivers. Steve, I think we also had similar numbers that obviously we are looking at the same things. A few questions that I have for both of you guys. One is, what would you say the difference is when you're trading this from a stock perspective? Or because for me, the most important thing that I look at is the dollar index and how is that going to behave after the economic event that has been announced. And especially because I like trading the pound dollar and the majors. But when it comes to stocks, what would be your approach to it?
Do you want to start off there or either way?
No, you go, Steve. You're the Trade the Pool stock guru over here.
Putting me in the hot seat. So what would I watch other than Dixie? Because that's what I'm going to be watching pretty closely too. But I think another kind of data point there we can be watching is TNX, the 10-year Treasury yield. And in general, just if we do get the Goldilocks, then I'm going to be more prone to be looking at some of these higher beta, higher risk, more momentum, maybe QQQ associated, SMH associated trades there. So that's kind of what I'm looking at. What do you think?
I agree. So I think stocks, as far as whether you're trading directs or through the indices, right, it can be very difficult because you get those outcomes where good news can be good news can be bad news can be good news, bad news can be bad news, right? Especially when you have this transition period where we have a new Fed chair coming in and completely wanting to throw out the old rule book, right? And basically write his own playbook going forward, completely rework the entire Fed. Exactly what they're looking at is probably going to change. I think people are trying to speculate right now on exactly where that is. There's very split opinions whether Kevin Walsh is saying that, no, saying look at the data, look at some of the, the 1 year forwards for inflation, and through that you'd imply rate cuts. other portions of the market are saying, no, listen to him. He's saying we're going to have this family dispute, and therefore the rest of the board says they want to hold for longer. So you can get this very split opinion, and that's where it comes down to things like positioning, which is going to end up pulling the market one way or the other on the day, which is also very difficult when we're in this situation currently just before a market holiday, which obviously skews the dynamic. So I agree, I would prefer to watch the dollar itself and then play the aftermath of where indices actually move from that overall.
I've got a question for you as well. In terms of like your risk when you're going into this, because I think a lot of people, especially in the Trade.Set.Go community, the biggest questions I get is like, how do I size for this? Like, what would I half my size? I went through the presentation of what I do, but I would love to hear from your perspective. If you are positioned already, what's your approach? And if you're not positioned and you're going in fresh, what's your approach there?
I would say it depends on my level of confidence around the tangential data that we've seen recently. What pieces I think that could deviate from the street consensus, what I've found myself. And so that level of confidence will then go to a positioning of, if I'm going to take a trade prior to the release, right? Do I want to be knocked out in as small a position as possible? Either you push and it hits, or you get knocked out in a small drawdown, which obviously you're likely to get slipped, so you want to keep that tight. Or do you draw it out towards the lows of the day or the highs of the day? Either way, right? And at least that time, as things start to press, sometimes you often get that whipsaw moment where you do snap down, then snap up, or vice versa. So that will give you that space to, depending on what asset you're trading, to decide to actually pull out immediately, just punch it, get out. Or you say, nope, I think we're going to hold. The headline number can sometimes come below, but the tangential data can come out much better. And so you tend to reverse, or vice versa. So it'll be dependent on those two factors right there, generally. So
I love that. I'm willing to go, if you're happy for it, LJ, just to go through one of your, I can see your screen there. It will be interesting to see what you're looking at, because we're about,
Sure.
Let me see the time. We're about 10 minutes to the release, so we'll probably need to start setting up on what we are looking at. I'm going to be looking at the pound dollar. I've been trading that all week. Unfortunately, I have to hedge this position because I'm not comfortable in trading it. I'm already in a bit of drawdown, so I don't want to take in too much risk. But I will show you on my trading view what I'm currently looking at. But what are your situations going into it?
If I can bring up my screen just here. So we had a few. Oh wait, it's definitely up. I don't know, Remy, if you can shuffle that over, perhaps.
Let's see.
Oh, that's the bane of my existence in my EVMux studio.
Yeah,
my
believe it,
profiles
like
pop up
we've all been through it.
Your setup is looking great.
That's beautiful.
Let me see if we can
Just
do
up, right? That's just
There
the
we go.
P&L, just up. There we go. So we've had some tie over. I was in the Fiverr stream just prior to this, so we were basically talking about earlier whether I consider to actually hold these trades. This is the gold trade. We had a few other things we were mapping out. Potentially through NFP, I'd see this kind of a push higher. This is where I'd look to take the first trade, see that we get the next sort of 15 minutes, half an hour, where you typically get that kind of pullback, you get the kind of retest and then run. And that's where I'd look to enter the second trade. Now, this is also very dependent, obviously, on the direction that NFP actually comes out versus the expected number. I am wondering if I want to go into this. We got 10 minutes now. Do I want to hold this? I'm kind of calling that we might actually get below 100K. I don't think the seasonality has been well discounted for the World Cup, right? If we look at the past jobs numbers, we've seen a bunch of hospitality and leisure coming in. And it's something that is very hard to seasonally discount, right? Obviously, there's basically no comparables. You don't have a World Cup very regular, let alone in your own country, right? So we've seen very strong jobs data for a while. The Fed has talked about this. We've definitely getting a bit more strength coming into labor force. However, it has been abnormally above what you would reasonably expect. And so especially when you look at some of the other tangentials like the quits rate, it hasn't really shifted much. So normally if you're seeing these kind of job openings come through, as that's begun to bounce back, and we're seeing these good NFP numbers, you should also see things like quits start to shuffle around. So we haven't seen that. So I'm wondering if this has been a bit of an aberration and potentially not being fully discounted.
Is that because you want to see gold going higher? Is that because you want to see gold going higher? You're like, give me the negative news on the US.
I mean that'd be great right now, of course. But no, I've been talking about this the past. It was the same rationale last NFP actually when I was talking with Dirk, right? When we do our little macro sessions, and we were both saying that definitely seeing NFP coming in much higher, and we did get a very strong number on the last read. So I think most of that is kind of probably flowed through now. Plus, you may have some lag effects from the Middle East section around hiring. So normally, companies get a bit spooked, and there is a delay in that hiring phase, but you don't see that until a couple of months after.
Well, we've got a fan here for Gold Rocket in a few minutes. Someone's on LJ's team here. What are you looking at, Steve? Let's see if your screen is working.
Is it? Oh, let's see. Oh, I believe I shared the wrong screen there, actually. We can look at that, but it's going to be SPX levels. I was working on getting those onto the ES chart.
Well, I can see my screen. Let me see. This one. So obviously what we are talking about and why we've entered here is for this big event that's coming up, non-farm employment change, unemployment rate. We're looking at 6 minutes now. I'm quite excited to see the number here. My position, and I want to show you a little bit on this chart here. This is the position that I was going in. I actually, before we did the live, I hedged my position. I was looking for a short, and it would have worked. But I would rather not actually take on the risk when we were live. But I was being quite sensible with this. But when you see it happen and you've planned it and it's there, and you're like, oh, come on. But for me, what I'm anticipating to see, if we're going to be, like you said, if we're going to have negative numbers, that is going to have a weakening on the dollar. Weakening on the dollar means that we're going to be going higher on the British pound. Now, we have broken above the previous daily high, and I'm looking to, if I was entering this with my positioning fresh, I will be looking for either a bounce on the previous daily high if we see negative. If we see that spike going all the way to the previous daily low, which is possible because I believe we're 80 pips. That is very possible to be done on an NFP, especially on a major. I would be looking at reversing if it aligns with the unemployment rate and the revisions to look for a long position. There's another reason of why I want to look at longs is because seasonal tendencies around pound dollar are to find a low end of July. We find two highs in the pound in the dollar, and we are just about on that. I'm going to show you a little bit when we see the release. I'll show you a little bit from MRCI. If you don't know, is where you can find seasonals over there. So it aligns with my bias. It also aligns with the preparation of the release data, if that's going to happen. We talked about gold. Obviously, if we are seeing negative numbers, it can be, and you would love this, LJ, because when I show you the seasonality, gold also finds a seasonal low just about now. So that would also help your thesis around going longer. Obviously, the event is just a couple of hours, and the seasonals don't matter that much. But if they were to position off these numbers, it could play a role when it comes to doing so. So the other thing that I always have open, even if I'm trading pound, is to look at what the dollar index is looking like. And I'll look at it on a daily and a monthly. And obviously we've been having the strength in the dollar, but there have been signs, I don't know any of you, if you like a little bit of a Fibonacci, of breaking lower the 23, and we haven't hit a 50% retracement yet. So if you're adding all the elements in there, I know people talk about these like a fair value gaps and so on. All we've had is an expansion of move without a retracement that has gone low enough to create opportunities around the dollar. Could this be the time where we're creating that opportunity for the dollar? That's what I'm looking at. Let's have a look at the time. We must be 2 minutes and 40 seconds. Who wants to take the screen for the show off? Well, let's see the chat. Who wants to see gold? Who wants to see currency? What is everyone trading? I can see DX bearish and Euro USD bullish. Another one who's lining up with LJ there on being bearish on the USD bearish. Okay, a lot of bearishness on USD. Interesting.
I do have a euro dollar long as well, so we'll see how we go. Yeah.
Everything needs to align with this.
I think as well we've got kind of a asymmetric type return as well, because everyone's been very the market has been very popular to be long dollar for a while now, right? And so everyone's already expecting rate hikes, or at least a longer hold, and potentially hikes next year, whether it's something in December or whenever it is. So definitely, if we do start to see these weakening numbers, which is my expectation, you get some of that draft coming out from the World Cup. We've also got, there's also going to be an inflation effect coming through there. That will start to drop off. And then, of course, we've got the Strait of Hormuz situation coming off the boil as well. And we've got oil back below $70. So I think there's a large potential, there's definitely a much more asymmetric return to see the hiking cycle actually come off the boil. And if you look at some of that tangential data where Kevin Walsh is saying that he wants to drive the Fed in that market direction, whatever the market is doing, what the market is seeing, what they're pricing, that kind of all lines up. So that's kind of where the underlying thesis comes from. Obviously, today is more about the headline.
Minutes. We're under a minute.
But
we're going to get the predictions in as well. And as LJ said, are you on LJ? Is dollar going to be bearish? Steve, what's your take?
Oh, is dollar going to be bearish? I think it's such a strong chart in my book, like high time frame, that it's hard for me to bet against it. I just need to see that number. I'm gonna be a fence sitter here. I'm gonna be obnoxious.
Okay, you call the number out. I'm gonna have the screen up to see the impact of the dollar. We're gonna go on the 5 minute here. We're gonna see if that candle is gonna be breaking lower or higher in just under 10 seconds.
Let's go.
What's the chat saying? 85% gold rockets. Let's see.
With that cold print, that'll be good for gold.
There we go. There it is.
Oh, hey, he's right.
We got the big boy right there.
Pending. I've got pending. Have you got a number?
Let me pull it up as well.
Non-farm employment rate 57. That
Yep.
heavy miss. And you are absolutely right, LJ. I need you on my show more often.
Yeah, that's what we do here. That's what we do here.
You nailed that. Wow. And we're seeing a very, very bearish, which is coinciding with the bullishness in the pound dollar. There we go. Off we're going. Obviously, we know that this first spike is a reaction to the number. And 57 is a very, very heavy miss. We have to look at the revisions. Let me see if they're out. And normally get published 30 seconds after. And we've dropped on unemployment rate, 4.2. That hasn't happened since July 2025. So this is a heavy. That is two bearish elements there. We just need to wait for the revisions because that can change what we're looking at.
And just for any potential future traders out there, we did just spike to clear out, or just about clear out liquidity at yesterday's highs. We're about 5 points away from that, or we're on the top of that wick. So interesting to note that we could not sweep and get that liquidity from the cash session yesterday at this point. So I'll be watching to see if that wick can run it through the top and probably initiate a little bit of a squeeze, potentially up to 7,600 ES. Otherwise, if a wick would be beautiful for a retest of the 75.50 key level that I have today. That's the magnet.
And by the way, guys, this is a 50 pip move on the pound dollar. I can see Steve's screen getting ready here. Let's see what you're looking at.
I don't know which screen is showing. Let's see. Oh, this is okay. So this is my homebrewed dashboard here for gamma exposure. So this is taking options data, basically the net premiums of the calls and puts at every level, and it's taking that to essentially get some key levels. So I'd be happy to get into that more if you'd like, but I know we got a lot of action here, a lot of stuff to show on the screen. Look at that candle.
The gold. Wow. Look at that gap. This is the futures on the gold. This is on the minute. We've had a push of, let's have a look. Look at that, 130 pips in just 3 minutes. So things are moving. So are you positioned now, LJ?
I am. I'm just trying to read into some of the deeper portions of the data.
Right, let's see if
I think we're good. So, yeah, I did hit TP on the gold trade. If I jump over to my screen, if it will come up.
Let me see if I can find the revisions for you guys. Okay, so there is the revisions. The change in total non-farm payroll employment April was revised to 31,000 from 179. Oh, wow.
Yeah.
To 148. And the 172 was dropped to 129. I can confirm this, guys, is a very, very bearish dollar take. So I'm glad I hedged my position on the pound dollar.
You guys, it's so funny to me to hear bearish, as you guys primarily are watching the dollar here as currency traders, correct? So I'm an equities trader over here going bearish. I'm watching everything go up. So
yeah, of course, yeah. Right, hence, like we were saying before, bad news can be good news for the indices, of course. So in this case, like obviously, yeah, you would get that pullback from that rate hiking potential cycle, or just staying on hold, or potentially introducing more cuts coming through. So exactly like we were saying. Yeah, bang on. Euro's now closed.
We have a look
out at 45 as well.
Euro dollar is up 0.57% as well. Wow, look at that bad boy.
Yeah. So I had the original TP was at 49. We're taking a bit of time. Closed out at 45 just here. We've now hit 49. Now going beyond.
Beautiful.
We are climbing. I mean, I know you are looking at bullish there, Steve, but for currencies, this is good news for long opportunities on pound dollar. It coincides with the seasonals, and it coincides with the gold seasonals as well. So there's multiple reasons here why you can. Obviously, don't take this as trading advice. Look at it as educational advice, because we all know what we're talking about because of our own trading, right? We are not trying to give you ideas on what you should be doing with your own trading. It's more to give you a thought process on why would I be thinking this is bearish or bullish, and if I'm already bearish, what could I do in this case, and so on. So euro has actually climbed already 82. That is the daily ATR in how long have we been? 3 minutes. That's crazy. Yeah. All right, let me find LJ's screen. Carlo or Remy, if we can share LJ's screen to see his
I
goal.
can't see to click it overall. So yeah, this is the total breakdown that we've got through here now. So I was just having a look through this to see if bunch of the breakdowns. I can't see anything spectacular through these numbers, but so nothing too different there. But I'll keep fishing if there's any gems in there. But yeah, so we're now, honestly, I probably TP'd on this a bit too early. So this 1, 2, 3 through here on the euro, this is basically, I always set out like a TP1, TP2, TP3, and typically take partials through here. I was hoping we'd actually get a bit of a stall and potentially pullback. We may still get that. So I took the TP1 right here. And then if we do get that pullback, I'd probably look to enter somewhere down here once again, right? And then look for that full drive up towards 114.70, 114.90 from there. So typically through NFP, you get that first rally, you get that pullback, and then you get a continuation in the direction of the numbers.
LJ,
So
I'm
that's
curious.
now what I'm waiting for.
Do you like looking for that pullback maybe on the liquidity from the cash session open? Or is there a certain time window that you're looking for? Or just a level?
Yeah, not in certain timing. Obviously, if they line up. But sometimes if you line stuff up too precise, you'll get front run. It'll start moving before that. So typically, I'll look for the level first of all, and then if that happens to coincide with that, I'll have that timing with the US open and everything coming through that, and then try to jump in just before that, because that will tend to actually propel things. So I want to get in just before that that area. So similarly with the Nasdaq, I did have a Nasdaq trade on earlier today when we were talking in the Fivers Discord through here. Unfortunately, that is one I jumped out for those same reasons, like we were talking about, where it can be good equals bad or bad equals good, or good, bad. So I wish I held this as well, because we've nailed it across the board. But yeah, on the Nasdaq as well, I will be looking for a bit of a pullback. We've had this longer term. Hang on. All right, if my chart will behave, give me a sec. This kind of triangular wedge pattern through here, we've respected each of these sides like a couple of times. And yeah, just like you, like TA is part of it, but I look at options levels, gamma levels, all the rest. And so right now I'm looking for this to continue to condense, and then eventually we get a break to the downside or to the upside, which is also going to be very interesting going into European summer, where you do tend to get that slight deleveraging, right? Now we've obviously had that popular one-way trade. I'd be curious to see if this actually ends up falling out of bed overall. I don't know what you think about that, Steve, or do you think we'll have like that trickle up, or do we get a bit of a malaise coming through?
It is interesting. Let's see. So what I would say is generally seasonally, I'm looking for bullishness here, especially after the kind of June swoon. As you mentioned, we're in a consolidation, kind of a holding pattern here into the start of the month. I would love to see maybe a little shakeout in the first week or so to kind of post that, get a nice bottom wick print on the monthly candle, and then we could look for that acceleration through your trend line there. But I just look at these pennants, and I know how many times I trade the first crack, and I'm wrong because they go for those fake breakouts or fake breakdowns. So I would love a fake breakdown here before we get it. I don't know if we will, though, because it's seeming like all hands on deck. It seems like they're trying to run this through yesterday's highs and keep on cooking. So I'll be watching that trend line very closely. That's 7,600 on SPX, or sorry, on ES. I can pull a number for NQ in just a second, but roughly call it 30 points up on ES, SPX, something like that. That's the kind of pivot where if we can see the push through, we could get a little bit of a short-term rally squeeze going there. Before we even make a decision, we could still do a fake breakout. I'm pretty bullish though here, so I'm looking for reasons to not be, if that makes sense, to kind of check myself.
Agreed. So that's the same deal. Exactly what I'm looking at. So we're coming up close to the top of that wedge. Like today, potentially coming into obviously the holiday period, we could get that further push, or do we get this pulling back and sort of consolidate around today's open? I think we do end up a bit higher. But yeah, I still wonder about that pre-positioning like I was saying, that's why I was wondering. I wanted to see, I don't get to stream with you all the time, obviously. So I was wondering what you might have thought, because looking at something like this on the Nasdaq, say, maybe a slight false break through there, break down through here, another false break, and then bang or bang.
Right. Well, one thing that I think is going to be interesting today is we're still seeing a significant divergence between NQ and ES. So, the SPY and the NASDAQ, essentially. So Qs are lagging, and tech is having a hard time off the back of a pretty rough day for SMH, our semiconductor index. The interesting kind of component there is IGV, the software as a service index, which has been getting beat lately, actually posted a very strong day, both just absolutely and in relative terms to the hardware there. So it's kind of like the check writers, the hyperscalers versus the check cashers, the SMH. So just interesting to see that divergence. And I wonder if we might potentially see ES capture a significant level, like I was saying, a few points up, and we'll be at the yesterday's liquidity. What if they grab that liquidity? Qs cannot make that push, and that could be the incentive to take us down south. Just something to watch for. Not sure.
Yeah, and for instance, like we had, obviously Apple's now talking about picking up Chinese DRAM. We were actually talking about this yesterday on the Fiverr stream as well before they came out and announced that. We've still, the demand is so high, the market's still saturated. So is that really going to matter as far as the margins? Or
right, well, not only
there's
that,
so much demand and it's so saturated that it's a necessary piece, and it's not really going to affect the chain.
Well, absolutely, there's that. But LJ, there's also the fact that wasn't this the same headline we got that shook the market like a week or two ago? So first off, I don't think it matters, but I don't know if all of the Korean investors who are 10 times leveraged in EWY and the Kospi, I don't know if they know that. So that could still scare them and shake them out, stop them out of their positions and cause that shock. But personally, when I'm looking at Micron, I'm looking at SanDisk, I'm not seeing the blow off top yet. I'm seeing a rally that everybody hates, which usually means there's one more good push at least. That's kind of where I'm at on that news.
I agree. I think I've got a chart for this somewhere. After we had the Micron earnings, for instance.
And just for the guys watching, I see someone for the giveaways. Guys, we're going to announce the giveaways at the end of the show. So make sure you sign up on the link if you want to win one of the 5,000 accounts that we're giving away. Sorry, LJ, yours.
No, that's right. Well, welcome back, Yiannis, as well. No, I was just going to say, Steve, yeah, the Micron earnings, DRAM obviously pushed down during the Middle East situation. We've had this massive drive higher. So the margins and the profits coming through here, I agree. I don't think there's any reason to call quits on this just yet. So
yeah, and in the bookings, I mean, they're going out so far. These, and Micron in particular, they're doing something very cool, which is they're trying to basically, it feels like they're trying to fight against gravity here by turning their cyclical play into this. Essentially, they're trying to lock in as many contracts, as many deals for the longevity of the cycle. And they're trying to say, hey, we're going to hold out through the drawdown, the typical drawdown of a cyclical cycle. We're going to keep our income consistent. And then they're saying we're calling for a super cycle for robotics going into 28, 29, 30. So if they can weather the gap, and I look at this kind of similar to the hyperscalers that are vertically integrating right now. They're eating it on margins right now because, I mean, it's expensive to buy this. But if they can survive long enough that all their competition dies from this pressure, well, they stand to make a pretty penny there going forward a few years. And the market loves looking ahead. It'll be very interesting because if you look at Micron's chart long term, there's always 1,000% move followed by a 80% drawdown, you know?
Yeah, exactly. Yeah, no, I love it. Thank you for that. I wanted to hear your 2 cents on that. So
I'm just going to give you an update on pound. I don't know if you have seen this before, but it's a little tool I've created for seasonality, and that's what we were talking about when we looked at the dollar. And if you look in the high of 25th of March, we're just on it right now on the 2nd of July. And this is the open source. You can't see it, I believe. Let me see. Yeah, this is there we go. This is the, you have three lines on this graph. You've got the 37-year pattern, 15-year and 5-year, all aligning for a high in these major times. And that corresponds, and I know that with you stock guys, you probably are aware with the cyclical analysis of stocks on what happens every 4 years and what happens on that side. And dollar has a big impact on that. So we're looking at this end of June, July, you will see there's the big high around this area for the last 37 years. And a smaller case for the 15 years. And then the lows starting to look at October period. So that gives you a little nice indication. Can you trade these things? No, it just gives you that, roughly when does it make sense that the dollar will be losing power and when does it make sense that the dollar will be regaining power. And that's what we're seeing now. We're seeing pound breaking. I use these horizontal lines as resistance levels and support levels. You can see how we broke through a massive weekly support and weekly resistance, and there's enough room to go all the way up to 13407 there, especially if we look at the range. The average true range on the pound has been 22, and we've currently done
Smash that.
Yeah,
Gotta
so
love it.
This is on the hour. We've done 80 pips, so we're talking about a big surprise there. But as you can see, there is a retracement, and that retracement is coming in now. It will be interesting to see. This is the arena that we're playing currently. It'll be interesting to see where, and we talked about in the webinar, if you are confident that you want to be positioned long in this, you have multiple ways to think about it. This is how I think in terms of my trading is, can I use this weekly support that is a strong support? And for you who probably are wondering, what are these lines? These are supports levels taken by weeklies. So what I do is I take the weekly support on a line chart and a weekly support on the line chart. This gives me where the turns happened in the market in a clear way. A line chart is the close of the previous day. So it gives you the outcome impact that's happened. So, and then when you go down the frames to the 5 minutes, you have a clean chart where you don't have to put so many support resistance on there, where it makes logical sense for the price to go next. And you can see how it does respect that very, very well in the history of it. And when we break it, it normally stops around its levels. And now we've broken a very strong weekly level, and we're hunting the next level, which is in 134s. But if we are, in terms of risk reward, does it make sense to chase this and push it higher now that we've already done, 4 times the ATR, and it's getting a bit bigger actually.
Yeah.
It doesn't really make sense to get and chase that spike, in my opinion, because if, let's say I entered along here, I would have to deal with a stop down here. It doesn't make any sense for me to hunt as close to the top as possible, because in terms of a risk reward, it doesn't make sense to take that trade. But if that retraces lower, look what happens to your stop. If you're trying to get the low swing, the lower you go into that, the smaller your stop is going to be. And then your risk reward makes sense because you are trying to achieve something bigger and your stop is not risking so much of your capital.
Yiannis, I'm curious here because I don't know if it's a coincidence, but you have your level right there, your entry right at the 6.2 fib. Is that a coincidence, or because that's one of my strategies, looking for that 6.2 pullback?
Yeah, I know that people think, oh, Fibonacci, woo-woo numbers. It's in my opinion, it's absolutely not, because first of all the traders, retail traders, are looking at this from the same perspective. We're all looking at the same numbers, and retail in the recent times have become a big player. It didn't used to be a big player, but now they have become a big player, and especially with things with currencies. You'll be surprised how many institutional levels use Fibonacci levels.
Yeah, I was going to say institutions as well use them. I know a bunch of these guys. Again, I think it's also just kind of one of those, we're humans at the end of the day. You have to try and map out some kind of area that you're working with, and at least get some kind of scaffolding.
Yeah.
And then it does become somewhat of that
Self-fulfilling prophecy.
self-fulfilling. Yeah.
Absolutely. And I see it all the time. For instance, now I can see that we haven't broken yet the 23, but if that breaks 23, the percentages, if you do a back testing, is about 60 to 70% that's retracing to more than 50%. What other thing will give you those percentages in terms of a back test analysis, if you want? Does it happen all the time? No, there's 30% times that doesn't happen, but you want to be on the side of statistics where things happen more than don't.
Right. In that 30%, those are wild cards. Those are the ones that are harder to control. And so, sure, we could always look for the most juice. We could trade a tiny little, meme coin or something and get a lot of juice. But we're looking for the, that's like having a V8 in a Prius or something. I don't even know. It's not balanced, So I like easy to control moves, and so that's why I love these pullbacks. And those are the 70% of the trades that I want to be in. The crazy guys, the young gunslingers, they can have those 30%. They'll stress me out and age me prematurely. So.
When you run your Fibonacci, because we're thinking on the same line there, do you take the absolute low, or do you take the candle that broke the move?
That's a great question. Well, I will do both, and then whatever fits my bias better, that's what I go with. No, I'm kind of kidding, but I look at it a little bit the same way I look as when I'm drawing trend lines. Do I include wicks or not? My rule is that if it's kind of like blackjack. If you're gonna hit on 16, you better do it every time. I don't know if that's a smart move. I don't play blackjack, but essentially, I have a system where if I'm gonna do wicks, it won't be a line on wicks somewhere and then draw it on a body somewhere else. I just need a little bit of consistency. For me, I just use the absolute swing high and low for most of the time, unless it's maybe two really obvious tweezer wicks or something, and then the impulse move starts at the body candle.
That's why I love when I'm doing my bigger, if you put a line chart on there, there's no wick. It tells you where that is. And when you put it onto the line chart and you turn it into, let's say, the hourly, and then you go onto a candle.
It's very different, hey?
It's very different to what you took. Someone would look at that, it's like, why have you taken that? But then if you actually look at the actual turns, it looks like a position that you would be taking. But in terms of Fibonacci, when it comes to Fibonacci, I'm thinking, how can this tool help me to manage the trade, right? Because I do a lot of pound average or dollar averages in your cases, where I slowly build up a position rather than go full throttle. So let's say I have a one lot. My idea will be, if I'm willing, for instance, if I wasn't in a position now, what I will be thinking is, all right, everything is aligning for bullishness. Seasonals, we've had I looked at the numbers now. Let me just tell you actually the numbers. So we've had April minus 31K revision, May, so we've gone from 172 to minus 43 on 129K. So that hasn't happened often, guys. It doesn't happen often. And the biggest one is unemployment rate dropping 0.1%. We're outside of the range of 4.3 to 4.5. Now, there's two things here. Everything is screaming, I know you're looking at positive language there, Steve. I'm going to do that for you. Positive for the stocks, and negative for the dollar. So that's something that you have to take into account, because everyone knows that knowledge. So how can that knowledge be manipulated as well? And that's where you see how much can the price be pushed higher to retrace the price to get to stop out a lot of people, to be able to get a position that is worth it for them to hold for the long run when they go with actually big size. They're not worried about the next 15 minutes on what they're going to do with that account. But in terms of analyzing and trading this, I will be breaking down my entries. Can I afford a stop outside of this range? So for me let's say I want to do a 50 pip stop. I can't do it there. I can't take it on the 23. And that's on one position. So I'm not going to enter there. Can I Can I miss the trade because it will hit the 23 and go higher? Yeah, but it doesn't fit my thesis of having a safe stop. So what if it goes to the level, which I would like it because it's a weekly level and it's a weekly support? Can I put my stop there? I can. So I can have a 44 pip stop, and even better, I have a monthly level here, which is even stronger. So can I have a 50 pip on the monthly? Let's have a look. I can. So I would place my stop below the 50, and then we're talking about profit. Now, I do something that a lot of people hate. I do small profits for bigger drawdowns, and it's counterintuitive for risk reward. But my answer to that is I've made a lot of profit through trading, and it works for me. And if you can find something that works for you in your psychology, and you have you need a very high percentage win rate for this to work, then it works. If your statistics say that it works, it works. So that would be something that I set up my stop, let's say a 50 stop. So for the people asking, I saw someone saying, where would you get in on this? If you're looking for a 50 pip stop, I would be still waiting for at least a 50% retracement on this. And if you want to have a smaller stop, because 50 maybe is too big, you can do two things. You can decrease your lot size because suddenly your pip stop can be bigger. Because if you trade, let's say 0.5 lots and you put a 50 pip, that's a lot of money. But if you put 0.25, that is a lot less money. It makes sense because you're halving your exposure on the same pip length. And then if you do what I do, or I know a lot of people do this here, is you can break your one lot position into multiple trades. And what I mean by that is you can have an entry, let's say on this level, which I like, and my second entry might be 20 pips away. So then the question is, this can be exposure of 25. So that stop will go there. And then the next stop would go to my level. So I'm halving my lot size, but my stop is going to be pushed higher because I've halved my lot size, right? So it's more chances that it's going to get hit, but my second entry will be in a better place, or second half of an entry. You can see how you can then, and the benefits of doing this is you can then manage multiple positions and not a single position and waiting for that position to see what you're going to do. And if you want to go even further, you can have 4 positions. So you could break those in quarters. And the benefit of that, I call it repositioning, is that you can, if I draw this, if the market goes all the way down and it taps you in, now you have 4 different trades with your same exposure. But what you can do is if the market comes back up, you can close that for profit and you can apply that into your management of the trade. So you can take maybe your worst entry and pay it off. So you can close for a loss, but you're actually evening up your positioning. So then you're left with 2 positions, this one and this one, to do the work of the other ones that paid each other off. I know it's a lot of knowledge there. But I just want you to think, for the listeners here, I want you to think of it. It's not always as simple as press market entry, there's my stop, because that might work for someone, but you and your psychology might need a completely different setup for your success to enter. And you might not be aware that you're not using your preferred way of trading because you have never tried it.
Yiannis, I love that. And especially when you're talking about focusing on the psychology and what works for you. But I think that you can even take that and like expand it a little bit. Like psychologically, every single human being on earth wanted to buy that big green candle, you know? And like there's no there's no ambiguity. So, you know, and so I think there's a lot of reasons for the market to pull back like that. Whether you look psychologically, technically, these all kind of align in basically saying, hey, if we're an institution and we know things are going higher, we just got the tell, we just got the big candle, I think it was Giannis. You said they're in no rush. They're in no rush to build their position. They can weather a little bit of a drawdown. In fact, that's where they want to push it to get their position. So maybe they put their massive limit buy order much lower than the current candle, and market makers have an incentive to bring it down there. Retail, they might pile in and then stop themselves out on the first red candle, forming a wick. And that's another thing that I love that you were talking about, using those line charts. That's something I need to incorporate more, because I get messed up by wicks too. And then I think about it and I go, well, wicks just represent retail kind of overshoot. The body of the candle, that's institutional investment. That's big size. So just loving what you're saying, trying to link the pieces
I
together.
was very, very lucky to have really good mentors when I started trading. One where I never met them in terms of Dow, famous Dow from Dow Jones, and he was the first who initiated the line chart, and it was for a reason to look at trends. It wasn't for, like we're doing now, analyzing charts or anything like that. It was, how can I go to someone who's looking to invest to say, hey, this is looking positive. So this is in the 80s, and all he was doing is looking at this and saying, hey guys, look, we've gone from here to here. That's a positive line. You need to buy this. Whereas now we have a lot more knowledge, and no one who looks at this can say they can't see this top, this high.
Yeah.
So whereas if I put it like this, someone might say, well, is this the high, or is this the high, or is it the wick high, or is it the body of the biggest candle? It can get really messy. And Scruffy, I don't know if you've ever met a trader called Scruffy. He's also in the Forex industry. He was the one who brought it to me, and it made so much sense because you're actually looking at data, historical data of closes, rather than the whole range of the data. When it comes to entry, though, I want to have more information. I don't only need the close. I need the open, I need the close, I need the high and the low. That's why candles make so much sense to do your analysis when you're finding entries. But to find turning points, I think it makes more sense to look at the whole day as a whole, rather than seeing the iterations of every single line or what's going to happen and so on. It's definitely helped my trading for sure.
Awesome. Really cool stuff there.
I'm looking at gold right now. We're getting into that retest. We saw a rejection there of the 33.6. But this is another way that I look at it as well, is if we have a rejection and time passes on, especially in an event that is volatile like this, it's highly likely that a high is going to be taken out rather than retrace all the way to the 50%, because any strength of the bearishness on this is not showing continuation. So
Yeah.
it would be safe to wait for another confirmation. Either, what I mean by that is taking the highs out and then you're creating a new retracement that you can work with. I don't know if you do that with your way of looking at Fibonacci's.
Yeah, absolutely. I like that a lot. And just, keeping it real simple, I think it's a great concept illustrator here. You either correct via time or via price. And via price, that would look like a big spike and a big drop, and we'd all be sitting here going, oh man, what just happened with the market? And, we'd have a lot more to have to kind of think about with that kind of spike up in rejection. Seems like we're correcting via time in a very healthy way, and just kind of setting up for that liquidity influx, which will come in with the New York session open here in about 25 minutes. So I'm liking what I'm seeing. I'm feeling good about my longer term positions. Wish I was trading short term, but it's early for me. It's still only 6:00 a.m. for me, so I'm not at my sharpest. So I'm hanging out with you guys, enjoying my morning.
Yeah, absolutely. And welcome back, LJ. I'm just looking at your gold trade here. I don't know if you were able to hear anything of that, but we were saying that the retracement that we always talk about when it comes to NFP has happened. Now the question is it a break of structure where this is going to continue lower, or is it the breathing space that was allowed on the gold for positions to take profits, and now they're actually, right, we've taken some profit, let's get the move going with bigger size and see the real move of the gold, which is already done quite a bit.
It has done quite a bit. So that, if I can jump over to my screen real quick. So that 4140 which was that next position that I was looking at. Ideally, if we got a deeper pullback somewhere down through here, a snap pullback, I would have liked to jump into something down here, ideally on gold. Gold I like less so. Now we're already up this high. Gold has struggled repeatedly. I think we will go higher longer term. Eventually get more of that force back into the gold market like we had obviously all through earlier this year and last year. Absolute chaos. But for now, I've actually jumped back into the euro here. I prefer to stick into FX markets. This is a bit... Let's see if we can reduce the opacity on that, so I can see things a bit better. So this is something I'd prefer to jump into. So just like you had up Yiannis, I think, where do we have this from? Other way. The fibs through here, hopefully that's not too faint, that we can still see it. So normally, like you were talking about with the fibs, I'll typically jump in around the 61.8 or close to that area, especially when we actually have a positive NFP. So when it's a bit more mixed, or a positive in the direction of the movement, I should say, a confirmed NFP number. When it's a bit more mixed, you'll typically get a deeper retracement. When we do actually have a bit more of a directional NFP, you'll tend to just come to that higher cluster and then start to push up. So decided to enter through here. We still may get that 50% retracement, which does line up with these prior highs in the euro. But for now, I've got a partial entry through there. So that's typically how I do this after we start to get that pullback. So I'm happy with that. And then I may...
Am I correct to see that you reversed the Fibonacci there? Is that, because I can't see the screen very well there. Is that reversed?
This is a Fibonacci extension.
Oh, it's your extension.
Yeah.
Okay, extension. Yeah. Okay,
So
great.
you can like reverse the numbers, either way. Either you could say it's a 38% retrace or a 61, depending if you're looking at the longer term trajectory.
I see.
As I do see, so if we go out to a high time frame, hence why I'm placing it this way, if we hide all the bits and pieces, I do see euro actually coming back up towards these 115s and eventually 116 longer term, potentially towards the end of this month. So if we do get that flip from Kevin Walsh, we have the next Fed meeting towards the end of the month, and then we do go into that European summer. And just like I was saying to Steve earlier, normally when you get the European summer, you get institutions pulling back on their total leverage, total exposure. They reduce that notional value. And so what of the popular trades are, they tend to pull back purely from reducing overall size, right? Even if you're not actually killing that momentum, that overall trend, you just get that slight pullback as we go into that lull through that European season. So I would like to see this drive higher in the euro. And obviously after the NFP, we've got the break of these local highs just here. So yeah, that's definitely the direction I've got. And myself and Dirk in the fibers, in our macro sessions, we've both taken swing trades through here. Hang on. I'll just put this to the side so we can see it. Earlier, we took it through here yesterday. So, not a bad scope through there. Just by these lows around the 113.25, and I've got an entry at 113.70 through here, targeting up towards 116.10 to 116.05 overall. So that'll be something I'll hold for the next couple weeks, month, so forth. So
I love that. Let me show you the. I've also. Let me see if I can show you this. Where's my screen? On the euro dollar.
You'll have to forgive my charts though. I always get a bunch of mess. We've got a ongoing joke. I'm the Picasso.
There you go.
With my charts, it's just, it's art. It's definitely art.
Exactly.
So
But
Okay.
people say mine looks like a Doppler radar or something. It works for us though, right, LJ? That's what matters.
exactly, it's normally when you're drawing up stuff on stream for everyone to have a look at. Like my actual like terminals are a bit different, that kind of thing. TradingView does start to get a bit stacked, but anyway.
And also, I always think of the analogy when you go to a doctor and then you write your recipe of what to buy from the pharmacist, and you don't understand a thing, but then you go to the pharmacist and they know exactly what they're talking about. It's the same thing with coding. It's like you might be showing something and everyone's like, what is he talking about? But it's very, very clear in your mind of what you're looking for and what you're working on. And the messier sometimes means that you're actually doing the right things.
Yeah, it's one or the other, right? Either you have no idea or you've got all the ideas, right? It's one of the two. So
Just bringing up the seasonals, just to give another picture though, because I saw you were long overall, long-wise on the macros. I would agree with that. We hit lows in May, and we're looking at highs around October period. If we look at the actual source of that, that low looks here. This is the low of the May, and we have actually good alignment on the 15-year pattern of 5 and 24 years. That go back to 1998 for two confirmed lows, and we're looking at the highs ending on this second low. This is the one that we're interested now in, the second high being end of July or beginning of August, if that fits with your analysis as well. The other thing I wanted to do, I don't know if you guys, do you use commitment of traders reports?
sparingly.
Yeah, it's not a big.
Yeah.
That's a no. That's a no. That's the one I've seen it, but I haven't actually used it.
No, I have I've been, I started trading 2013, so it's been a while now. 2012, 2013, yeah, 13, 14 years. So I do use it. It depends how much value you can derive from it. So that's always the trouble I have. So depending on, I would say the time we have right now, it would be more valuable, right? More prudent to have a look at that, especially when we have shifts in things like the new Fed chair and that type of stuff coming through. But it depends, because often you get those sort of, not so much sticky, but we have these, various months, month on month of drivers for, say, the ECB, the Fed. Commodities have already got their direction. You've got momentum in indices, in various stocks. I find it less valuable then, and normally it's a bit too lagged. I find it more valuable when you've got some other kind of drastic shift, like a new Fed chair, like the Middle East situation that we just had, or COVID in the past, or stuff like that. So when there's a more very large discrete macro shift, something like that will tend to reflect, and you can get enough signaling. Typically, I normally find just watching spot myself moves first, so I will use it as more of a confirmation tool after the fact, but not necessarily to front run.
I'll show you a little bit of how I use it, just to pique your interest. Obviously, in commitments of traders, you have a report that comes out on every Tuesday, and it's anything that's traded above 2 million contracts. So it's big size. Yep. So we're talking about institutions, we're talking about leveraged funds, speculator, like all the big broker firms that are actually speculating price. Then they have to legally report what they've positioned. So we get, like you said, lagged positions. But normally these positions are a start of a move. And I'll give you an example. The way I use commitment of traders is looking at reversals of the speculators. Because you can look at the commercials. And a commercial, for someone who doesn't know, means that someone who actually physically trades the asset. So if I'm trading oil, I've got barrels somewhere and I'm selling the barrels and someone is buying the barrels. So that is the commercials. You can track that. The speculator looks at everything that we look. They have ridiculous amounts of money, what we call institutions, They have probably 15 analysts on every single aspect of trading, and they make decisions and they try to make money out of predictions. Similar to what we do, but think of 100 times the scale. Now, these guys also get things wrong, and they normally get things wrong when they're heavily exposed towards an asset. So what I've done here, I've created this little indicator that brings in the commitment report in the form of a bar. And I wanted to see, can you look back 14 years and give me statistically, have there been times where they've been more exposed, more than 2 standard deviations of what they've done, right? So on the bottom side here, anything above the white line indicates that they're very, very exposed in short positions. If it's green, it's in long positions. So then what I can do is I can look at the horizontal line of when they've been very exposed, and I can see, have they been wrong when they're heavily exposed? And you'll see that we have a bullish position on when they've been extremely heavily exposed. The other one is back here. So it gives me, even though it's a lagging indicator, I could argue that it's not as lagging as an indicator because it's actually the numbers from last Tuesday. And normally that position indicates a start of a move. So for instance, I'm so excited on Friday to see what this will look like after NFP, because they're probably either going to be super short or long, depending on what the positions are, because they will try and cover their positions based if they got the speculation wrong or right. So I will look at this and be like, okay, that is quite nice indication. So now we are on another touch. As you can see, these are weeks, right? So we have one, it started here, 1, 2, 3, 4, 5, 6, 7 weeks to get the long saw going. But the original overall, and the other thing that I look at is how high is it related to the previous highs. So for instance, where we are now, if I draw a line, horizontal line, like this, you can see that we haven't even hit the top highs yet. So there is room for this to move lower before we get another push higher. But I have good indications, and if we go further back as well, that when speculators are exposed long, exposed short, it does have a bullish effect. And this happens every single time they've been above the standard deviation, or if not, it has been a bullish for at least 5-6 weeks. So that's something that I look at. Now, the other one that I look at is retail, because retail get things wrong all the time. And unfortunately, that's us. Now, this is where we look at the reverse, right? So when retail is heavily long, look at the impact of the currency. And you can see that, and as you can see, when it's not above the 2 standard deviation, it doesn't have that impact of finding the highs. So, and talking about statistically, when it's above 2 standard deviation, it's very, very rare. We're talking about an event that happens 2 times in the last 5-6 years. So that's why I'm a bit excited when I look at this leverage position on the pound, on the euro dollar, because it's indicating maybe not this week, but in the next 5 weeks, we will be in a position where I will want to be long, and we align ourselves in this, LJ, with this entry.
This is really cool. Oh, sorry, LJ.
No, it's right. Sorry, just a relay off that. I will say, more rather to recorrect what I was saying, I don't use it in isolation. Normally there's other tools I'll use sort of first, and then it's a point of like confluence and reconfirming other bits and pieces. So I'll look at like, options data, 25 delta reversals, that kind of stuff, at the money volatilities, see where we're going through that, spot price, general sentiment, and then yes, the COT data after that, and then move through it. So in that sense, I definitely use it. I just don't use it as a singular vault point, put it that way.
For sure.
Makes better clarity on what I was saying.
Well, since you guys know a little more than me, I have a question for you. Is this primarily tracking CTAs? Like the big kind of...
trend following?
Yeah, exactly. Because that's what those charts were jumping out to me as, basically saying that like whenever one side of the trend following market gets too overweight, they're usually wrong, and it often marks a pretty exact bottom or inflection point, like you were showing there. So that makes sense to me. I have one more question. I'm curious. So I'm a very like less is more guy because my brain can't hold too many numbers at a time. So I'm wondering what edge you glean from separating the longs and the shorts as opposed to having those kind of as one
Now,
aggregate chart.
now that's a very expert question because everyone was looking at shorts there and longs, and no one was talking about the net, right? What
The
you're
net,
referring to,
yeah,
That's
net
what I'm
buy.
curious about. Yeah.
So
that was yeah.
the net can also be tracked, and if you look at the chart that I showed you, let me show you here. So here, when the reporting of the COD report comes out, not a lot of people look at the longs and shorts separately. But the reason I look at the longs and shorts separately, I also, and I didn't mention here, I look at the percentage of longs and shorts, and I see the change of the percentage of longs and shorts. So you can see here, even though the spikes were very high, and the reason I said there's probably 4 to 5 weeks that we can still go bearish is because they're only applied by 38%. So there's still room there to apply more of leverage on the speculation. But in terms of the net position and change, you can see it here in a line graph, for instance. You can see the green is large speculators, which we're breaking down further. You can see they have been increasing positions positive. So if you see 62% of their positions is long, even though the leverage position, when they start building short positions, that's when they're trying to recover the long positions, and that's where you see the change of when you start seeing the change of the trend is because they're like, right, we've been going long for this for a long time. I need to cover this for shorts, and suddenly they've missed the move of the longs, and then they start building, and it's very easily seen when you put it on the graph because you see it gradually building positions as time is passing. So that's one way of looking at it. Obviously, you also have the COD index that tracks the last 6 months and the 36 months, and in this case, it will show you a bearish move on the dollar, which has been spot on, and it gives you with a percentage of 100% for the 6 months on this report that where the dollar is going to be bearish. And the 36 month is at, 88% guaranteed that is going lower. So you have to take these with a pinch of salt because it has to align with everything that you're doing. But because someone might see that, well, I say, oh my God, that line looks perfect. And I wish I knew what it's talking about. And then I could just buy it, hold it, and be a billionaire. Unfortunately, it doesn't work like that because very easily I can show another currency that potentially that has happened, but the follow through hasn't impacted. That's why this is a question for you guys. For my buyers, when I'm trading something, these long-term things is just a green light, red light, right? So for me, it's like, are we seasonally bullish on the dollar? Green light. Okay, that means that I can short pound and euro, or I can long the gold. Are the commercials, especially the leveraged funds, agreeing with my thesis? Because you can do the reverse. If you're in the standard deviations and they're building position short, that aligns with your short position because they haven't filled the buckets of short positions yet. So then you can play that. How many pieces of information did you use to have an A setup, and what is your minimum to have a B setup that you're willing to take?
That's a great question, man.
You guys.
Well, it depends for me a little bit. I'm working on quantifying the last bits of my system where I'm not just being, an emotional trader on any level. So in general, it's hard for me. I kind of basket them like an A+ setup. Basically, there's nothing standing out in terms of like a red flag for me, if I'm doing like a position trading type thing, I'm checking the technicals, I'm checking the fundamentals, I'm making sure that it hits all of these specific things. Like I'm looking for companies that are at inflection points and are just starting to turn profitable. I'm looking for that to align with a long-term base, like kind of like a Wyckoff setup, something like that. So what may constitute an A+ setup for a swing, it doesn't have to have the exact same criteria as maybe a scalp or a day trade, So for me, it's more basketing, and then it's still vibes based, as you can tell. I don't have exact metrics for an A+ versus a B setup intraday, but I think I know it when I see it. And the biggest thing for me is I am conscious to adjust my sizing to my confidence. And that's the biggest thing for me, just making sure I'm not trading with size on something I don't believe in. And when I do see a fat pitch, I'm sizing up and making sure to get paid for that.
I love that. And Jonathan, for someone who, the people that have been following it, I have an NLP background. I don't know if you know what that is, neuro-linguistic programming in terms of psychology. And what you said there, a lot of people say, the gut feeling, right? I see something, I know it's going long, it's happening, and you try to explain it to LJ, and LJ is like, BS, what you're talking about, where's your stats, or whatever. In the studies that I've done, one of the biggest indicators, or the best indicators you can have, is the time and exposure you've had on the charts. Every time you've had an emotional impact from what you're seeing, if it's a drawdown, if it's a stop loss, if it's a green day, like on the gold now, if it's a very green day, or if it's a very low day, that is all information that your brain is taking and is saying, this is dangerous, this is not dangerous, this is semi-dangerous, this is very dangerous. But you are not tracking that on a journal or an Excel sheet. So when you've had 10,000 hours of Steve experience in the market, Steve has a tool that no one else has, and that is what you call a gut instinct, where you're looking at the chart, and let's say in this euro dollar, oh look, it's just caught the 38.2. That means that I'm going to go short, but I'm not sure. I feel like this could break the highs. But you have a student who comes up and it's like, well, how can I do that? How did you know that that's going to go higher? Because your rules say that it has to go to the 50% retracement. But what they don't know is that you have seen this pattern more than 15 hours or whatever, and you know that you can't write it down, but the patterns that you're seeing gives you the indication that this is an alert for me, and I'm not going to take the trade. And it's hard to explain.
It really is, but I think you did a great job there, honestly. It's the ineffable, and it's ineffable for a reason. It's hard to put your finger exactly on what is making you so bullish or bearish. And I'll be the first to say sometimes those are wrong. So I always try to scaffold that, with hard objective data points. But sometimes you just gotta vibe trade it. This is not financial advice.
I think that's the true point of discretion. When people talk about discretion, right? That's a very common thing, especially today in social media land. People talk about discretion. Normally, there's discretion between having that with experience, and discretion where someone just decides that, like, this looks cool and I'm going to do it, right? It's very different between someone that has had that like 10 years plus or 5 years plus or whatever versus someone with like 5 months or 12 months, right, in the pocket. So you are going to build up that learned intake from watching charts minute after minute, hour after hour on every single time frame across various assets, having other market events go on and how things react, and you do build up those neural pathways. Just the same thing you would with a quant strategy, which is essentially the same thing. It's all just neural network, but now you've got exact data points that you take and you inject them into that framework and then figure out the outcome. Your brain's pretty good at doing that as well. Obviously, we're human, though. We do have aberrations within that, just like Steve was saying. So you do have to take it with a grain of salt and then build out some scaffolding around that. But over time, you will get better and better with that. So I don't see it as a bad thing. I think even if you look at some of the biggest sort of famous traders through the days. You know, Stanley Druckenmiller talks about it all the time, where some of his biggest trades have been where he's just like, okay, this feels right, I'm just going to do it, and just punches it. Right? He's got decades of that background, and he's like, I can't exactly find the precise piece that tells me that's right, but I know it's right. And you do.
It's apps in every industry. Previously, before trading, and I know we're getting close to the giveaway, guys. So I hope you have put your email. We're actually over the time because we're having an amazing conversation here with the guys. Make sure you put your email into the giveaway. And I think, Carlo, if we're ready to do the giveaway, if we prepare everything for the 3 winners for today, super excited. Maybe LJ can announce. I know you're a fave on giving these giveaways, so
Sure.
we can do that. But I wanted to say that in my previous job, I used to work with elite athletes in Team GB in canoe slalom. And we planned for everything. I mean, we had what calories they're eating, what strength training they're doing, what techniques to use on certain turns, and we would analyze every single position, what they do, what they like, what they don't. But when it comes to the Olympic Games, and they have to perform for 1.3 minutes, or whatever that time they have to do, and that is their whole career, might be 20 years of trying to get there. You can have all the data you want. If they feel the gut that they need to do something in that moment, you have to trust that gut, because it's not only the information of that moment or the information that I've given as an analyst, it's everything that you're receiving from the environment, because every piece of information in even this moment here is very unique, right? Us 3 talking about it and trading live is very unique. So we're never going to experience this exact moment again. So if you can't trust your gut in those moments, what do you go with? You have nothing to go with. You have to go with your experience, put a lot of time of studying and understanding what you're doing, so then the gut knows what to use. It's like using an AI agent who you've taught him millions of hours of information versus an AI that's just turning the screens and trying to trade for the first time. It's very different.
Absolutely.
Agreed.
Good points there.
I think we are ready to announce the winners. So
Let's go.
LJ, the floor is yours. Guys, are you ready? Let's get some thumbs up. Everyone's been very quiet.
Come on, guys. Yeah, come on.
Let's see. I'm hoping you're putting those likes in, because you're not going to win if you don't get that extra like. You don't want to play with destiny there. I can see.
Punch it.
I hope you do this in next month NFP. I would love to have the guys here. I know the information is that potentially I'll be joining one of your lives, and we'll be doing this a lot more, because I'm sure everyone has taken one piece of information that they can use in their trading, and they can become better. Because the skill of a trader is how can you take something from Steve? How can you take something from LJ? How can you take something from someone else, and then you make it your own, where everyone thinks, I don't get what you're saying, but then it's very unique to you and your trading. Then you know you're very close. I can see some thumbs up. I'm hoping the thumbs up that actually commented going to win this. I'm rooting for you guys.
Yeah, punch that like, get those likes up, guys, and you'll be in the giveaway. So there you go. That's how it works, right, Yiannis?
Yeah, I mean, it works with that. You also don't want to play with the fate. You want to use every single asset you have, and liking wins giveaways. It's just proven. Okay, I think we are ready. Let me see. I think the screen already has the winners. So LJ, the floor is yours. And I think we're going to switch to it now.
Alrighty. Do we have a drum roll here somewhere? We got There we go. Alrighty, guys. Here are the winners for today. Jack, 5K high stakes. Congratulations. We got Saiful, another 5K high stakes. and Balaji 5K high stakes. So you guys are the winners for today's stream. Congratulations there, guys. Beautiful, beautiful effort. I know you guys definitely put the thumbs up. You definitely clicked like. That's what drove you home. So well done.
I do recognize, I really hope this is Jack from our Discord, because he's been trying to win one of these. I hope it is you, Jack. And I know you have liked the screen, so it has worked. There you go. Just remember for next time, like the stream, and it works.
Exactly.
Thank you so much for joining, guys. I think we're going to call it a day, because I know you guys are busy as well. And look at this perfect timing, my camera goes off.
Yeah.
Until next time, I know we have a lot of things coming up. Steve, thank you so much for joining. LJ, so nice to meet you guys. I learned so much from you too, and I know we're going to do a lot of that in the future.
Awesome. Thanks so much for having me, guys. It's been a blast.
Beautiful. Thank you, everyone. Thank you for coming, and look forward to doing it next time. Thank you, Yiannis.
See you guys.
You too, Steve. Ciao.